Hey guys, Mike here. So obviously SOFI reports earnings last night. The stock rockets up 20%. And so you're thinking today is going to be this gigantic day, right? 20, 30% up and all that. And then it opens up and it's kind of like, oh great, up, between 4 and 6% all day. It kind of wavered back and forth and stuff. And so, the question is really what happened from last night to today. And so I think part of it had to do with the earnings call itself. And so, I went through, listened to the whole hour, and I think it was 13 minutes long. It was nothing but audio. But, I love you guys, so what I do, took the PowerPoint presentation, took the CEO's audio, overlapped it so you actually get to see or hear him go through the numbers as you get to see them. So, you should get a lot out of that, but more importantly, what you're going to get out of this video, I think, is what he was trying to do was set the real expectation for 2022. Okay, a realistic expectation in the environment we're in, and what's going to be happening, because they made that massive purchase of Technisys. And so we're going to kind of go into that. He's also setting the table to understand when you're going to see more gains. It's going to be first quarter, second half of the year. And so that is critical for you to understand if you're a shareholder or even thinking about getting in this stock. Okay, and so we're going to go through all that for you, and I'm going to try to keep it as short as possible. Okay, so that was kind of the news that he was trying to give to us. And so speaking of news, our friends over at the Daily Upside, by the way, I want to give them a shout out because I've been reading them every day and getting a lot of articles from them to help me with videos and give me ideas for videos and help me keep up with the market. And I'm telling you guys, you can see right here, you get 3 to 5 stories almost every day. And you get not only stories about stocks you might own, but the sectors they're actually in. And then you're talking about not only local news, but world events that are affecting the market. That's what they focus their news on. And here's the kicker. It's completely free. All you got to do, click the link down below in the description right there, put in your email, hit submit. That's it. Doesn't cost you a penny, okay? And I read it every single day, all right? And so I've actually got some videos you guys have seen off that, as a matter of fact. So, and some videos coming up as well that I've gotten from there. And so, it could give you some investment ideas, give you news about stocks you own, sectors those stocks are in, that kind of stuff. And so it help you keep up to date on all the market news. So click it, put your email in, hit submit. Again, completely free, okay? So let's go ahead. We're going to start this video off with Anthony Noto talking about, basically how they performed in the quarter, growing members and all that good stuff first, and then we'll get into the big purchase and what we expect from first quarter, second quarter, and the second half of the year.
We had an amazing quarter for member growth. We added 523,000 new members in the fourth quarter, a record in absolute number terms, and impressively up 39% versus the amount added in the third quarter. As a result, we ended 2021 with 3.5 million members, an increase of 1.6 million, up 87% year over year, and well above the 3 million member target set in January of 21. We also set another record with new product adds of 906,000 in the fourth quarter, up an incredible 51% versus the number of third quarter ads. We finished 2021 at 5.2 million total products, more than double the 2.5 million we had at year-end 2020. And at Galileo, we grew enabled accounts 67% year over year to 100 million. The success of SOFI's unique financial services productivity loop strategy. Critical to the FSPL is creating best-of-breed products that build trust and reliability with members, which increases the likelihood they choose SOFI for a second or third product. When they do, we benefit from increased LTV per member by generating more revenue at little to no incremental customer acquisition cost. As a result, our higher LTV allows us to invest in more differentiated products and services, which in turn drives more demand and higher LTVs. It's had its biggest impact yet on 2021 results. The scale of our top of the funnel products is now large enough that at the same cross-buy rates, fourth quarter cross-buy volume more than tripled year over year to more than 380,000 products. And more than 1/3 of our new products were adopted by existing members. Our unique FSPL advantage not only helps us exceed this goal, we did so without notable associated marketing costs.
And it really was a good quarter, guys, as far as I'm concerned. And I understand the fourth quarter is usually tough for SOFIs. It is a lot of companies. So the fact they made the numbers, and actually, hit the projections was a pleasant surprise to say the least. But some of the things I took away, and some of the things he said on the call was, remember, one, they, obviously the student loan moratorium is still in place till May, right? So coming up in Q1, and they said they even lost like 30 million last year because of that. So in Q1, they're going to feel it. Part of Q2 is going to feel it. So you won't even see that business come back until the second half of the year. Number two, they are projecting, this is SOFI, 5 interest rate hikes from the Fed this year, okay? And so obviously that's a double-edged sword for them. It's a double-edged sword because, one, they take out debt to try to grow as fast as they can, right? So taking out the debt is going to be more expensive for them. On the other side, though, especially now they have the bank charter, they'll be able to charge a higher interest rate, but also this is the first time they'll be able to charge a competitive interest rate because they won't have to borrow money from other banks at a interest rate they had to pay to those banks, right, in order to loan them out. They'll be a lot more competitive, especially with some of the products they're rolling out. They're really pushing the direct deposit, right? And they grew that immensely. I think it was like 50% they grew that from Q3 to Q4 or something like that. But, what they're trying to do is get people to put direct deposit into their account, no kind of minimum balance and stuff, and they actually able to draw an interest off that, right? Make some money off just your checking account, which would be nice, right? And so obviously they'll be able to offer more competitive student loan rates just across the board. And so this is really the first time they'll be able to really do that because they'll be able to keep the members' deposits on hand now, okay, and use that money to loan out. So that's a big thing for them. And I literally have a notebook full of notes, as you can see right here. And so, another one is going to be the products they're offering. They just did margin, but the next one they're going to start doing is options, right? They're going to start rolling options out on the platform. And so they're constantly trying to churn out more, products for the members to be even, not only be competitive, be the best out there, right? The one-stop shop. And the reason why they're able to save on marketing costs, right? Because, they spent the money on the ad rights for the stadium, which he says done really well for them, but also because usually if you come in with them, you have student loans. Well, guess who you get a home loan through? Them. Guess who you get a credit card through? Which they grew the credit card, crazy numbers on the credit card growth. I mean, it was crazy. But so you end up getting more than one product. Well, that's free. It doesn't cost them anything. They didn't have to market that to you, right? You're already in the SoFi family, so to speak. And so, they're cross-selling constantly, right? And they have so many products to do it with. So that's what does, cut down on their costs. Matter of fact, they cut their costs by 18% or something like that as far as acquiring customers. And so that was really good to see. Now, the other big thing is going to be, obviously, this big acquisition of Technisys, which is a digital cloud-based core banking platform. As you can see right here, they go beyond digital banking. And you can see they have over 100 million banking customers in 16 countries right here. And understand why this is a big deal is because one thing he said on the call, and it was probably the line of the call, right? They want to be the AWS of fintech. We've seen what Amazon's done with their cloud business. It is just killing it, okay? And so they want to be that of the fintech world, right? And so what does this do? Remember, they already had Galileo. Galileo is the payment processing side of the business, okay? They contribute about $88 million. I believe it's a quarter to SoFi already. But, Robinhood's on there. Many other clients you saw are on there. And so that continues to grow. But now what you have, and this is one of the key components with this company being cloud-based, that's where they want to be. They want to have everything in the cloud. That's where they're trying to shift everything. And what this company will allow them to do, instead of being a B2C business, which is, business to customers like us, they can be a B2B. That's what this company already does. They have banks using their system. So SoFi will actually be able to have other banks that be targeted, not just the banks, but other enterprises to use their system in the cloud. And so how much money is that going to generate? I'm not really sure. Right now, they're go ahead and saying you're going to have around 800 million coming from now to 2025. We may start to see this more in the second half of the year when you'll see that revenue coming in. And it also cut their cost by like 85 million as well. And so it gives them, and to me, this is just one, actually two pieces now. Now that you have Galileo and this one, I think you're going to see more acquisitions, probably not this big, but of smaller type of companies or even partnerships he was saying they try to do. They had 42 new partners added in 2021. And so, to try to build this out, and so it allowed them to offer even more products, right? in a cloud-based system, which of course is the future instead of the old systems they use. And so they're going to be trying to get other banks, fintechs, enterprises, everything to start using this service. Plus, it allows them to open up more internationally into, like, I think it's 12 other countries, because that's where this company is already in anyway, as you saw with the number of customers and the number of countries they're actually in. And so it gives them access to those as well to be even more international now. And so who knows what the growth is going to be on that. We'll have to see. A lot of this stuff, the benefits you won't see to the second half of the year. The negative part, obviously, is it does liquidate, current shareholders, because like almost like $1 billion in stock is what they did this way. I think they did the same thing with Galileo, if I remember correctly. About 10% of the market cap is what they paid for it. And so, that is the negative part. And so, which I'm going to actually touch base on that. But to me, this is a big purchase. They could have built something like this out, but it would have took a long time probably. And so I think that's why they'd already been working with this company. And so they just said, let's just go ahead and bring them on in. We know what they got. We know how it works. They already have a customer base. They're already international. And so I think, I think it was a smart move. Again, I trust the CEO. I like the CEO. He's a smart guy. CFO of the NFL, Goldman Sachs guy. He's not a dummy. And so I like that. And so, kind of looking at some of the financials, he did end up with a record adjusted net revenue of $280 million, 54% year-over-year growth, and adjusted EBITDA, that's earnings before interest, tax, depreciation, and amortization of $5 million, representing the sixth consecutive quarter of positive adjusted EBITDA. And you can see the annual adjusted net revenue is growing each year, as well as the first positive annual adjusted EBITDA of $30 million over there, as you can see. And then looking at 2022, something to keep in mind here, they're expecting to deliver $1.57 billion in adjusted net revenue and adjusted EBITDA of $180 million. And so you can see the 2021 actual and then the 2022 guidance right there on the right-hand side. And so the marginal increase from 3% to 11%. And I had a whole lot more financials, as you can see right here, but they're so tiny and I couldn't get them any bigger because there's so much data on this. So what I'm going to do for you is stick the presentation down in the description, okay? And so you can look at them, and basically it goes over, everything you can imagine is in those numbers. You can see how much they've grown the student loan division, personal loans, home loans, all that stuff. Everything's in there. But I'm saying, I think one thing that happened, and now that I just looked back and saw they closed out about 4% up from the day, from last night when it was up 20% to today only being up 4%, is, to me, listen to the whole hour and 15 minutes of the thing, is like he's really setting people to understand that first and second quarter, they'll probably hit the numbers, but it's not going to be anything fantastic, I don't think, because a lot of the benefits from the bank charter, when student loans come back online, from the new purchase of this company, you'll start to see that more in the second half of the year, right? Third and fourth quarter, most likely. And so I think he's kind of setting that up. And so that could be something, because I didn't see any analyst downgrades when I looked. I saw some buys. And so that's probably not what it is. But also in the environment we're in right now, you're talking about what's not hot right now, what's not really getting a lot of love from institutions are companies that take on debt, which is SOFI. They got to take on debt. Two is, companies that are vulnerable to, and of course, why is that? Interest rate hikes, right? And so they are vulnerable on the debt side of that, even though they'll be able to charge higher interest rates and actually make more revenue off of it. But that's one thing. Two, they're a SPAC. Never forget that, okay? Virgin Galactic, DraftKings, all SPACs way older than SoFi, they're still getting punished, okay? SPACs are they're not in, all right? They're set up differently. They have a lot more shares when they come public versus normal IPOs, stuff like that. And so that's just, whether you like it or not, that's just the way it is, and that's what they're in, okay? So that's number two. And number three, like I said, I think he's just setting this up, for the second half. And plus, I have no doubt there's going to be more purchases. And the other thing is, with this purchase, when it becomes complete, we're talking about $1 billion more in shares out there, okay? That'll be outstanding, so more shares. Institutions don't like that, especially right now. And so I think that's probably what you're seeing right now, because if this was, January of 2021 when this quarter got reported, the stock would have been roaring 20%. It would have been opened up a huge day. But it's just not. Right now, these aren't the kind of stocks that are going to get that kind of love right now. That's just the way it is, all right? And so, we'll see how it goes. Let me know what you're doing, with SoFi. Are you in it? Going to get in it? What do you think about the presentation? What do you think about the quarter? What do you think about the 2022 outlook. Okay, so that's something to keep in mind. And so, you know, don't forget, if you want to sign up for Daily Upside, hit the link down the bottom right there, put your email in, hit submit. Again, totally free, and I promise you, you absolutely enjoy the articles you get because, you know, they're brief, to the point, and full of data, which I like. So it helps me out. So, and it helps me keep up with the market. So hope you guys have a good one, and I'll see you tomorrow.